Hey everyone, welcome to Solving the Riddle, the podcast that unpacks the financial puzzles shaping your future. I'm Andrew Whitewood, and together with Alec we explore the ideas, behaviors, and strategies that help people make smarter financial decisions and build lasting wealth.
Well, folks, our last episode was investment lessons from the Comrades Marathon, and it was an absolutely fantastic episode. We had a fantastic Comrades Marathon, 2 new records, both by South Africans, Gerstein, George Kuska. Well done to them and all of those people who finished the Comrades Marathon. It's a magnificent achievement. And of course, Comrades Marathon is very much like financial planning. You need to plan, you need to surround yourselves with professionals. And that's what we've done today. We brought in Marisca, who's a tax advisor, Tax Matters of Marisca on Instagram. You probably know of her. She is really a leading light in her field. And we'll be covering things like, people are going to get 5 million, 6 million people are going to get an auto assessment dropped into their inbox within the next week or two. And many with surprises, many not knowing what to do. Hopefully we'll be able to unpack some of that. We'll be talking about the Yachties, the content creators, the home office, so many things to unpack here. And Andrew, you want to come in here? You know Marisca very well.
Yeah. So Marisca, first and foremost, welcome to the show. Alec's given you an amazing welcoming. I've known Marisca for the best part of about 7 or 8 years when I lived in Cape Town. And I'll be honest, I just stumbled across Marisca's presence on Instagram. We were unpacking her journey to date on Instagram and on social platforms in general. So yeah, Marisca, just a big welcome to Port Elizabeth. It's the first time you've flown to Port Elizabeth. I don't know if that's a good thing or a bad thing. But yeah, once again, just a big thank you. And just Alec, opening up on the auto assessment, tax season is pretty much on our doorstep, 1 July. And just from our auto assessment point of view, Marisca, we had a look at some stats. Alec mentioned about 6 million people on 1 July are going to receive that email, that message, etc. But only about 0.5% of those 6 million people actually make a change and edit. So maybe just to throw the first ball into your court, let's just have a look at what are the important dates. What does an auto assessment actually mean to our listeners and viewers?
Yeah, well, thank you for that intro. Okay, so auto assessments really means that SARS has all your information, or what they think they have all your information. So tax season starts 1st of July and auto assessments runs until the 12th of July. So what happens during this period is SARS has third-party information from you, and that is from your employer. So if you had a salary or maybe like a commission income or whatever income they have from you, and interest income from the banks or your retirement annuity deductions, like all of that information that they already have for you, they are putting this on your tax return. So what happens on this is they believe that this is all the information they have for you, and you then have the option to either accept it or you can edit it.
So if I can just come in there.
Of course.
What I've found with a couple of our clients who've been auto-assessed in the past, they get quite excited when they do a refund. And people like to press the button because, I'm going to get some money. But they don't really look through it to see if maybe I should be getting a little bit more of a refund. Is that possible?
Yes, that's possible. So it's possible that SARS isn't aware of all the deductions that you could have. Or maybe they're not aware of your rental income, which could very much be a rental loss, actually. So you can add your rental loss to that. You can also maybe have certain expenses that they weren't aware of, maybe medical expenses. So they get your medical aid deduction or contributions, and then the medical expenses that they paid on your behalf, but maybe you paid more of that.
So just from an auto assessment point of view, so one step backwards. So now I get that email, Marisca, and I see it and I actually just don't do anything or I do something. So let's just say I click edit. How long, what are the T's and C's? What are those terms? Like I've heard 60 working days, 40 working days. How does that process actually happen? So we've already identified that probably a lot more people should be clicking the edit button, right? Rather than just auto accepting. And like we spoke to Jeremy earlier, he gets his 2,000 Rand back and he's over the moon. But the thing is, he could potentially get 4, 5 or 6 grand back. But I think what I want to get to, maybe a little bit more practical side of things, nuts and bolts, how does that actually work for the listeners and viewers out there? Because I think I want to encourage more people to click that edit than just auto accept, for example.
Yes, okay. So from the date of issue that SARS issues your assessment, you have 40 working days to review it and see if you want to edit or accept it. Then in that 40 days, obviously you can edit it. And if you don't do it in the 40 days, you have another 21 working days to request an extension. So yeah, that's basically 61 working days that you have to do that.
It's a long period of time.
3 months.
Yeah, Alec, we also, from a business point of view, we deal with a lot of business owners, etc. I don't know your view, Marisca, with regards to provisional taxpayers. Maybe also a starting point is what is actually a provisional taxpayer? And Alec, you've got some examples from a financial planning point of view and dealing with clients. Like they think all of a sudden they were working, now they're retired, they must become a provisional taxpayer. So maybe...
Or they're surprised they have to become a provisional taxpayer because now they've got income from more than one source. It's not just your employer. So you've got a living annuity income, you might have a life annuity income, you might have interest income from the bank, all of those type of things which put you in the provisional tax bracket or sphere. Perhaps you can touch on the provisional tax, expand upon it a little bit, and also the dates.
Okay, so if you're a non-provisional taxpayer, then you can submit your tax returns from the 13th of July after auto-assessment has now closed their doors. So 13th of July until 23rd of October. So that's for non-provisional taxpayers. Provisional taxpayers have a longer period until the 22nd of January 2027.
But also starting 13 July.
Also starting 13. So you can get it in. You don't have to wait until then, but you do have a longer period. And generally, they take their longer period because maybe they have a top-up payment to do and they want to wait that longer period. But let's go with why you would need to register as a provisional taxpayer. So if you have income other than a salary and your general things that SARS now has as your auto-assessment, and maybe you're not a provisional taxpayer. So income other than a salary, like maybe rental income or your side hustle or your crypto income, your trading income, like you make maybe investment income, you sell capital assets, then you have to be a provisional taxpayer.
Can I just come in there before you carry on? I think it's also important, if we're being auto-assessed, not to look at that and say, "Oh, they don't know about my rental income."
Yes.
That they get excited about that, whereas they should be disclosing it.
Yeah.
And that's where Andrew's edit button needs to come in.
Yeah.
You have to be honest and upfront, otherwise you are likely to get penalties. It's not SARS's fault they don't know.
Yeah.
So it's your fault. You didn't inform them.
Absolutely. So people can think bonus, SARS didn't pick up on that, but SARS isn't going to know about that, but the burden is on you to declare that to SARS, and it can come out at any time later. And then if you did not tell SARS, they give you underestimation penalties and interest for all of that.
And just speaking to that point, so this is obviously more the sphere of financial planning, but Marisca, Alec and I once or twice have come across estates where obviously the individual that has now passed away has not been 110% open with SARS, and that creates massive complications for winding up the estate, delays, and the negative impact on beneficiaries and heirs can be massive. So I think from a practical point of view to everyone out there listening is, you got to save yourself $1 or $2 now potentially, or R1 or 2 now. But something happens to you, and SARS start digging. As you know, Marisca, I think the one authority that's pretty well run and is getting better run in this country is SARS.
Yeah.
And they pretty much can do anything they want to do with regards to your affairs. Am I correct?
Yes, that is correct. And actually, personal story is that my gran went through that, where she didn't tell SARS about everything, and then when it came up about like winding up her estate, they took a lot of money from her, and I think a lot of people they're not aware that is going to happen. And another case where that happens is if you never told SARS about your rental income and your property gets sold, that goes through the transfer duty process. So SARS is aware of the fact that you owned a property, and then they see you never declared that income, rental income. So what did you do with that property? So there's ways that SARS can become aware of income that you didn't declare to them before.
Or they're just spreading their net, right?
Yeah.
So you mentioned something about a top-up payment. Sorry, Alec, just take Marisca back with regards to provisional taxpayers. I don't think everyone's aware how the provisional tax regime works with regards to like those 2 interim payments in inverted commas and then the final top-up. So maybe if you could just unpack those technicalities for listeners.
Okay. So provisional tax, we're talking about individuals now. You
Yes,
have a 12-month period starting the 1st of March until Feb. That's the tax year. So first provisional tax period gets submitted in August, and that's where you say my income from March until August was X, and I predict for the full 12-month period it's going to be this amount. And then what is the tax payable on that divided by 2, and then you pay that amount in August. So that's first provisional tax payment. Then in Feb, your next one is due, and you have like your like you submitted in Feb. So you have your actual income and expenses for 11 months now from March until January. And you say, okay, for Feb, I predict it's going to be this. So let's add that. And this is the amount of tax payable minus what I paid in August. And then you have an amount payable now in Feb. So it could then happen that maybe in that Feb period, you maybe like, okay, so like, let me take a step back. What you can do is that you have to be within 80 or 90% of the actual income. So maybe you said in Feb, okay, I don't have all the money now to pay my provisional tax. I'm going to estimate 90%. So that top-up payment, or maybe there was an extra income that came in Feb after you submitted your provisional tax, then you have until the 30th of September to do that top-up third payment. They reduce your interest on that third top-up payment.
Okay. Yeah, it's quite complicated and technical, Alec, at the end of the day. And I think the key thing from our side is, once again, the tax window season is upon us, and you've got to play open cards with SARS and actually know what you're doing, right? So I think that's a key reason why we got you on the show, Marisca, is this is not our area of expertise, but Alec, like we always position with our listeners and viewers, is we're a part of an ecosystem, Marisca, and we unpacked this in a little bit of detail before hopping on the show today, is that you also specialize in a specific, call it line or sphere of tax, right? And tax is very diverse, just like financial planning. But the key thing, Alec, and I'm on a bit of a roll here, is that you mentioned your rental properties, hiding away rental income, etc., capital transactions. And I think something that is very, very topical at the moment, specifically in South Africa and the world, is cryptocurrencies, Marisca. And I think the key thing, maybe if you can just delve into that, and what are SARS doing? Is it falling under the SARS microscope? What are the regulated platforms like Luno, etc., needing to do? Are they going to have to do it in this tax year, future tax years?
Yes, that's a very interesting topic, because I think all of these years, everyone was like, what's going to happen? Does SARS know of it? Regulation. And that has actually now happened. So from the 1st of March this year, they have kind of like told, so they have told Luno, VALR, all the South African exchanges now have to report to SARS the same way that your bank does. So when you earn interest, your money's in the bank, you earn interest, they report that to SARS, you get your IT3B certificate.
So it's actually going to be physical tax certificates.
Yes,
now.
exactly.
Okay,
you get your IT3C certificate. So the South African crypto exchanges now need to report that in a certificate to SARS, and it's going to be on your tax return when you open it already. And what's going to be included on it is all the trading that you did throughout this entire year. So all the buying, all the selling, that's going to be on your crypto certificate in 2027 tax year when you open that return.
And so, okay, now we're going to get a little bit technical, but you just mentioned trading. So is that going to be capital in nature or income in nature?
That's a very interesting question. And I think it's a little bit more of a gray area, is that for anything to be capital in nature, you need to prove that you held this for a reason other than profit making, right? And for crypto, it's very difficult for us to prove that. Everyone who bought their crypto was like, it's going to go to the moon, I'm going to make all of this money with that. So if you invest your money, let's say on the general stock exchange, you're going to get dividends on that, and you're going to get a capital growth, but you don't get that on crypto. So how are you going to prove that you held it for a reason other than profit making? And then it doesn't fall into that same category of, if you hold a capital asset for longer than 3 years, it's automatically a capital asset. So generally, most of the time, it's going to be trade income.
Interesting. Then another interesting one. A lot of young South Africans have headed overseas and are having a good life on the yachts, or working really hard on the yachts. So let's talk about the income that they earn, the tips that they earn, and so forth, because I think there's a bit of confusion there.
Yes. Okay. So the income that we call them the yachties earn is generally completely exempt from tax. So they have an exemption that if they spend 183 days outside of South Africa, they have their full remuneration exempt that they make on the yachts. But the tips that they make isn't included in that. So, and a lot of the time they don't even include that in their tax return. So that definitely needs to be included in your tax return, and that is going to be taxable. And I think another mistake that yachties make is just going, okay, well, I have this exemption, I'm not even going to declare that to SARS. And that is, I think the majority of yachties, actually, they don't submit their tax returns to SARS. Yeah. I meet so many of them that actually then tell me, oh, I have rental properties in South Africa, I earn rental income, and then they've never declared that to SARS. So it's very important for them to know that even if you do have the exemption, your income is still taxable, and then you need to prove to SARS why it is exempt by the fact that you did spend that 183 days outside of South Africa.
So the example you literally just gave, I met with a client a couple of weeks ago. She's a yachty, but same thing. She's got a rental property locally, etc. And I just said, I referred her obviously to the company we deal with locally in P, and I just said, you just got to get this sorted. You've got to disclose everything, like you rightly said, Marisca, the exemptions apply, but you still need to disclose this information. Yeah. And I know in prep and conversation before today, we also chatted about a lot of people working in China, working in Vietnam, and the way SARS potentially, maybe Marisca, if you can come in again, how SARS are going to start changing their view and treatment with regards to people living overseas, not ceasing to be a tax resident, not disclosing income, etc. How are SARS potentially going to change their view?
Yeah, so SARS has indicated that they are aware that there's people who have immigrated or left South Africa, like maybe it's temporary, they're going to go for 5 years work abroad, so they think, I'm coming back to South Africa, so I'm not going to say anything about it or do anything about it. And then they also think that because I earn under the 1.25 million rand, my income is exempt from tax. So SARS have picked up on people leaving, and then they tied up the numbers and saw, okay, everyone who has left and everyone who has submitted their tax returns not declaring their foreign income in there, the numbers don't match. So SARS have indicated that they are going to make it more difficult for those people to come back to South Africa. So if you come back to South Africa, let's say 5 years later, then it's not going to be just as easy as, okay, I'm back, I'm now declaring my income. SARS wants to know, where were you for that 5 years and what income did you earn for that 5 years? And then either they're going to include all of that income in your tax returns, or maybe even the capital gains tax that you were supposed to pay when you did cease tax residency or when you were deemed to cease tax residency, that might become taxable. So it's important not to leave it because you think I'm coming back or I earn under 1.25 million rand. And I think we can go into this topic, but you can be deemed to be a non-resident of South Africa without it being your intention.
Yeah, another perhaps a little bit of a grey area is the content creators, the YouTubers. People are making a lot of money online now, so they're making this money. Sometimes YouTube is perceived by some people to be foreign income, but it's coming into South Africa, into bank accounts here. How are the content creators treated?
So if you're a South African tax resident and you earn YouTube income, like even Instagram, you're an influencer and you get all of these brand deals or sponsors, like you maybe get invited to an amazing hotel and you don't pay for that hotel, but you stay there and you now sponsor that on your page, SARS sees that as income. And income is anything that you receive that you did not pay for. So if you received a lovely weekend at a hotel but you didn't pay for that and you are using that to sponsor that to your page or show it on your page, then it's income and you have to include that in your taxable income, and that includes
almost like a fringe benefit.
Yes. So it's anything. Did you get free shoes? Did you get the handbag? All of the things that you got for free. And it's even something as promoting a meal at a restaurant, and you got that for free. If this is your what you do for work, then that needs to be included in your taxable income.
But how are SARS going to find out, Marisca?
So SARS is lurking on your social medias. They are definitely sitting there seeing what's going on, and they're very intelligent, and they're more intelligent than they ever were before, and they're spending a lot of money on figuring out where things aren't going right, and they actually have people looking at your
And
Instagram.
I suppose they could also contract AI to do that for them.
Yeah.
To say, look through all the Instagram pages, tell us who've got the biggest subscribers, who's getting the
Yes.
most interaction. I suppose they get information from that as well. That's
assume
quite interesting. Talking about the content creators and so forth, what type of expenses would be deductible for them?
Okay, so any expenses that's in the production of income, and this is in any field that you are. If you have an expense that's in the production of income, so maybe for them, they've got their cell phone, they've got their computers, they've got their, all of their equipment that they use, and they have subscriptions and the internet, all of those expenses that could be deductible from their income.
Okay, and what about, and let's go narrow from content creator to wider, the home office situation?
Yes. Okay. So the home office, it's the same thing. It has to be in the production of income. And then this one is a little bit, a lot more specific, is that to claim a home office expense from your income, it has to be used exclusively as an office. So it cannot be that table in your corner in your room or
spare
maybe,
bedroom or something
no,
like
not
that.
at all. It has to be a room that has a door actually that can close. And the only thing that's in that room, it's your table, your chair, your laptop. It cannot also be a storeroom. It cannot also be even as much as this. If your kid's little table is there next to it because they sit there while you work, SARS is not accepting of that because it's not used solely and exclusively for you as an office. So it's very specific that it cannot just be that extra room or something that's used.
And sorry, Alec, are there implications when you sell your primary residence in the future, Marisca?
Yes.
So you've claimed, sorry, I know enough to be dangerous when it comes to this. So yeah, I'm going to throw that ball back into your court. So what
Yes.
are the potential implications when you sell your primary residence in the future?
Yeah, I think that's a very important topic to bring in here because not a lot of people know this. And what people do is they claim their home office expense. And to be honest, it's not a huge deduction because to be able to claim it, it's a ratio that we calculate. So we look at what is the square meter of your home office compared to the square meters of your entire house. That creates a ratio. So let's say, for example, it's 10%. Then you can deduct 10% of your home office expenses. And that is like the cleaning, your electricity, everything that it takes to run it. 10% of that is not a big number, and what you're risking here is a loss in your primary residence exclusion. So when you sell your house in the future, then obviously you get the first now increase to 3 million rand primary residence exemption or exclusion. So you have to do that same apportionment when you sell it in the future. If that 10% was used for home office expense, you need to apportion your exclusion by 90% only. So you lose that 10%. And that amount can be much more than your small home office deduction.
That's very interesting.
It is very interesting. So, you should talk about home office and it has to be used exclusively. A couple of years ago, I was asked to send pictures of my home office, of the bookshelf, because I mentioned a bookshelf, of the printer, and all of those type of things. So they are monitoring this space. Let's, so much to talk, and we've got another episode which we're going to do with you for September. But for tax season, let's just give our viewers and listeners an idea of who is allowed to deduct expenses and what are the expenses that they are able to deduct.
Okay, so if you're a salary earner, you're very limited in what you can deduct. It's really your medical aid, retirement annuity, maybe you've had some donations. But if you have, let's say you're a commission earner, to be able to claim deductions as a commission earner, your commission has to be more than 50% of your total remuneration. And what's included in that is if you have commission, maybe a small basic, you've got a travel allowance and your pension, all of that, a medical, if you get those fringe benefits, all of that makes up your remuneration. So your commission has to be more than 50% of that. Then you are allowed to deduct expenses that's in that was incurred in the production of income. So then you can deduct expenses, and that will be things like your cell phone, your computer cost if your company obviously doesn't pay for that, if you pay for your own fuel, entertainment because you maybe take a client out for coffee, you meet with them, and then your home office expense. So you can deduct all of those expenses if you are a commission earner. The same thing applies to if you are a freelancer. Obviously that you don't have to have that 50% because it's different than commission. But if you're a freelancer, sole proprietor, you've got a little little side hustle while you actually work, all of that can have expenses deducted. And your golden rule that you're thinking of here is, was this expense in the production of income? And then it can be deducted.
So a great example is a rental property, right? So you've got to be cognizant of all those expenses incurred in the production of income, like rates, agent fees, all that good stuff. So it's the key thing is it's not just commission earners, Alec. It's a core principle when it comes to tax is that expense incurred in the production of income. But like you say, it's not applied to salary earners at the end of the day.
No, which is sad for them.
It is indeed.
So Marisca, a couple of things. First of all, to our listeners and viewers out there, if you want to stay abreast of tax matters in South Africa, go to Instagram, Tax Matters with Marisca. Really, I follow her every day. I love what she's posting, some fantastic tips, certainly helped upskill us. But in closing, what is the one gem or message that you could give to people ahead of this daunting tax season for people? 6 million people getting an auto assessment within the next week or two.
Yes. So my great tip for everyone is that if you're expecting your refund, you have to make sure that everything on your profile is correct, because if you have outdated bank details, or maybe you've got non-compliance that you're not aware of, your refund is going to take so much longer to pay out. So my tip to you is go on your eFiling profile and go look at your compliance status and see if it is actually compliant, and then also to update your bank details. So generally, SARS says it takes 24 hours to update your bank details, and you do it online, you do it on eFiling. But in some cases, they need to FICA or verify your information, and then you need to submit supporting documents, and that can take up to 21 working days for it to be changed. So you don't want that delay really to happen on your refund. So that would be one tip. And then the other thing is, I think just in general, if you not for normal people who just earn a salary, like your tax is quite basic, but if you earn commission income or maybe more like your side hustle and all of those kind of income, a lot of people don't get tax advice and they get deductions wrong. They overpay in tax. They're not aware if, should I even still be earning in my personal capacity, or should I actually get a PTY? And people think tax advice is so expensive, and it is expensive, but it's an investment that you make. So you very easily go and spend that money on a night out, or buying nice shoes, or going for a nice dinner. But the great investment is getting tax advice, making sure that you're optimizing your tax situation and saving on tax.
I think the key thing from our side, Alec, is thank you very much, Marisca, for coming on the show. We're super excited to have you back on the podcast and the show in September. I think in September's show, we're going to go into a little bit more detail about more intricate matters from a tax point of view. I think the key thing also in closing from our side to all our listeners and viewers, this is not tax advice or financial planning advice in any form. Just a massive thank you as always, Alec, and once again to you, Marisca. Chat soon, everyone.